Hi friends, this is Rahul Jain, and in today's video, we are going to discuss fundamental and technical analysis. When it comes to investing, one of the biggest myths is that an investor can either use fundamental analysis or can use technical analysis in silos to make good investing decisions. The reality is that fundamental analysis and technical analysis are complementary. To make investment decisions in a household, both husband and wife discuss pros and cons of various options before reaching a conclusion. Investing is no different. Fundamental analysis and technical analysis complement each other to make holistic investment decisions. In this video, let me explain what each of these analyses are and how they complement each other. So first is fundamental analysis. In fundamental analysis, broadly, we analyze following information. Number 1, balance sheet of the company. Number 2, profit and loss statement of the company. Number 3, cash flow statement of the company. Number 4, management of the company and their track record. Number 5, shareholding pattern of the company. Number 6, future guidance given by the management of the company. And number 7, any relevant information in the latest news. This analysis is likely to give us insights about the company's A, past track record of sales and profitability growth. B, past track record of company's assets, liabilities, cash positions, and so on. C, future forecast of company's sales and profit growth. D, insights into company's market valuation. E, business mode of the company, and much more. So basically, fundamental analysis gives us insight into quality of a stock along with its valuation. Not only this, fundamental analysis can help us compare stocks on various preset ratios such as liquidity ratio, solvency ratio, profitability ratios, and so on. While fundamental analysis is a very powerful tool to assess a stock, its main drawback is that it does not reflect sentiments of buyers and sellers in the market. And this is where technical analysis becomes a very useful tool for investors. So what is technical analysis? Technical analysis is the review of historic price and volume information of a particular stock. And by using the historic price and volume information, investors try to forecast the future price movement of the stock price. By looking at the historic price and volume data of a stock, the idea is to gauge the sentiments or behavior of buyers and sellers towards a given stock. The past behavior of the buyers and sellers can give insights into their likely future behavior. For example, if a company that has been making losses consistently declares very good profit growth in a specific quarter, but the price of the stock still does not move upwards, it may indicate that the buyers are still cautious about this stock, or that the market has failed to factor in this information due to some market inefficiency. Therefore, it may be an opportunity to buy, as there is the probability that the price of the stock may rise in future. Essentially, the behavior of buyers and sellers is reflected in the historic price and volume movements of a stock. There are various preset technical indicators that investors use to gauge stock strength or weakness in the market. Number 1, RSI, Relative Strength Indicator. Number 2, Moving Average Convergence and Divergence, MACD. And number 3, Bollinger Bands. Technical indicators like these can help investors in making decisions such as entry price of a stock or exit price of a stock, and so on. So as we learned, fundamental analysis and technical analysis look at different aspects of a stock and hence provide investors holistic insights into a stock. Ignoring either of these analyses could lead to half-baked investing decisions. Hope this video has given you good insights into fundamental and technical analysis. I look forward to see you in my next video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.